It's a Top That Trade Day. Nothing like a summer Top That Trade with a beautiful background courtesy of Mr. Alan Knuckman of BullseyeOption.com. And ready to take on Alan is Phil Flynn, a Fox Business Network news contributor. Round number one, guys. BTD or STR. Time to buy the dip or sell the rallies. What's the better strategy?
When it comes to strategy, both. Or any strategy is good as long as you have a discipline and you stick to it and you have risk control. So by the dip, I think the market's been in that mode here for 2023, but I've always said to sell too soon. Sell any rally, sell too soon. You can always get back in. If you leave money on the table, you still made money. That's the plan. But the key to have discipline. The Goldman Sachs gentleman that wrote an article about this, thinking that the market has shifted, I don't think it matters. You want to buy low and sell higher. That's it. I don't care how you do it.
It was funny you mentioned the Goldman Sachs report that said we've gone to sell the rally mode, but he wasn't the only one. There was two or three other analysts that were saying the same thing, which probably means it's time to keep buying the dip, right? When everybody all of a sudden changes course overnight, when you have a trend that's been in place for a year and everybody says it's over, I don't believe it just yet.
It's not over.
But, if you look at the market for the last couple of months, I mean, this is a bull market that everybody's hated, right? We weren't supposed to be to the levels we are. So even if we get a little bit of a correction, that might be a healthy thing and an opportunity for those stocks that you couldn't afford when they went straight up.
Round number two, bury the lead. Lead, as we say in journalism. The big short guy, Michael Burry, is reportedly making a $1.5 billion downside bet on the market. But is he? And do you buy that bet?
If it bleeds, it leads, right? To get the big headlines, you have to come out with doom and gloom. That's going to grab your attention.
The story has gotten a lot of traction because he's making a $1.6 billion bet, but he didn't spend that much. He spent a fraction of that on the options. A fraction. That's the idea of leverage. When you buy options, you can control a large position for a smaller amount. Now, he also put this on in June, so we don't know the duration of this. So, yes, it could be protection on the downside. People use options as insurance. So maybe he has a multi-billion-dollar portfolio and he's buying puts as protection. So there's a lot we don't know, but it's gotten a lot of attention.
Well, that's the whole thing. Do we know or do we not know? Is it a hedge or is it a bet? And that's what we have to find out. I agree with you. But at the same token, if it isn't a hedge, you're spending an awful lot of money to put on a hedge, right? I mean, you could put in protective stops. You could do other things other than putting that money out there.
Round number three, housing rock and hard place. Mortgage rates are up, but home construction's up. And there's limited inventory on the market. So what's your trade to rock the house? Real estate or real estate connected stocks?
The answer for me is still yes. I think the issue is that people are in the if and but machine. They're looking at if they got a mortgage now, what would it be compared to what would have been when rates were at all-time lows? So there's math that says your mortgage is now $1,000 higher on a $500,000 house. Which is money, yes, but you can't go in the Wayback Machine and say, I bought at the low or sold at the high. It doesn't work like that. It is what it is right now. And the reason rates are at high levels is because the economy is so strong. That's the point. The economy is at record strength with record unemployment and all these other positives. So they have to continue to have rates at a high level to knock down that growth and slow down that inflation, which they've kind of done so far.
If you look at the housing market, it's a story of two different markets, right? If you're a first-time home owner trying to get into the market, it's the worst time ever. I mean, you see these rates go up. You see the cost of these homes are going through the roof. You have shortages of lumber, shortages of copper. All of these things have driven up the houses. But if you're one of the haves and not a haves not, this is the greatest time to own real estate, right? You can control this market. I don't see a lot of downside in the cost of real estate per se, unless you're talking commercial real estate, which is going to be a bumpy road. But if you're looking, at the housing market, we think it's solid because there's a shortage. There is a huge demand. I'm just afraid there's a lot of people when the interest rates are at 8% that aren't going to be able to get into that market and going to have to rent.
Here's your bonus round question for today. It's back to school time. Are the following tickers all true or all false?
False.
I didn't say any tickers yet. The tickers are school, learn, class.
True, 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 true.
I still say false.
Okay.
All are false. We have a winner chicken dinner on the way to the UP.
Get back to school and learn.
We celebrate and we're so proud of all of our students, and I'm proud of you guys. Go to businessfirstam.com for where to see our show on TV.